Hey guys, what's up? This is Cody the Coin Raptor, and welcome to my channel. I'm here to talk to you today about Ark Invest's new Bitcoin monthly report. Now, this is going to be for the month of October, and we're going to go ahead and just get into the good stuff here. Now, you can actually find this Bitcoin monthly report on their website. I'll put the link in the description of the video. And I'm going to scroll down here to the most important parts of this Bitcoin monthly report and how I interpret them. So network activity is showing increasing signs of health. Now, one thing that they've done here is that they've gone through and they've actually upgraded their view of things like miners revenue and active owners for the network usage. This is something previously that they had as bearish, and now they're saying it's neutral, so they've given it an upgrade. Miner revenue is something I've talked about multiple times on the channel, and it seems like miners right now are getting into a better place. Miner health is getting better. It is increasing. They're actually getting a little bit more revenue than they have in the past, and I've shown you that when we've gone through something like the Puel multiple, that will show you the miners revenue. All right, now these haven't really changed. The Bitcoin cost base and profitability, none of these changed. Most of them are bullish, some are neutral, so I'm going to move on from here. Now, also very important to point out is that Ark Invest has their own measurement from where they calculate Bitcoin, as they call it the investor cost basis. And this investor cost basis is calculated by removing the miner cost basis from the general cost basis of the market. And in their opinion, that's about 18,800. And that should be strong support for Bitcoin. And that's something we've seen in the past when we've gone through and we've looked at the charts. That 18,800 region has been very strong support lately. Now, one other thing they point out here is that Bitcoin has traded in a very tight range, okay? And Bitcoin doesn't often do that. Most of the time, it's all over the place. It has increased volatility. And so usually when it bunches up like that, when it trades in a tight range, you can expect an increase in volatility. So that's basically what they're coming out and saying, is that they expect an increase in volatility in the next couple of weeks or months. And I would tend to agree with that. Now, they also point out here that they have the long-term holders are actually taking significant losses now. And they put this long-term holder ratio here at 0.5. And what that means is that the long-term, on the average, long-term holder participants are incurring nearly 50% losses, okay? And that's important to point out because the long-term holders need to take more losses in order to guarantee the bottom of the bear market. So you expect that as the bottom of the bear market gets closer, that these long-term holders are taking higher, losses. Now, they also point out the short-term holders, and the short-term holders are in a bit of a different situation. They're comparing the short-term holder to the MRVR, and MRVR is something I've talked about before in the past. But basically, what the MRVR is it's market value to realized value, and they're saying it's close to 1, which means that the average cost basis is finally catching up to the market value or the current price. And so they're saying that basically last time this happened, last time it approached 1, there was a top, and that top was 47,450. So they're saying that it's possible as the ratio approaches 1 that we get more of a topping formation in the short term. Now, they also have the this slide here on the miner pressures. I've talked about miner pressures quite a bit, and I feel that they're getting better, right? Miners are getting healthier. Now, they're saying that despite the miners facing pressure from increasing hash rate and decreasing prices, their selling pressure seems to remain muted. And we've seen that based on the miners' reserve, right? The amount of Bitcoin that miners are holding in their wallets. We've seen that based on that it's pretty much stayed stable, and it hasn't really gone anywhere. So that's really important to point out. The fact that that's happening, I think, is actually pretty bullish. If the miners start capitulating, they're going to add selling pressure, which is going to drive down the price of Bitcoin. Now, I also want to go ahead and point out they also point out the ETH to Bit to Bitcoin pair. So the ETH to Bitcoin pair is just comparing the Ethereum market cap compared to the Bitcoin market cap. As the Ethereum to Bitcoin market cap goes up, that means basically that Ethereum is stealing market share from Bitcoin. And they're saying that based on this, that you have a growing risk on sort of environment, because they're showing here that traders are taking their money out of Bitcoin and instead they're buying Ethereum instead. And they say here that Ethereum has outperformed Bitcoin by 12.28% this month. So that's essentially what they're trying to say there. Next, we have the Bitcoin volatility. So Bitcoin volatility, they're coming out here and they're saying that Bitcoin has been less volatile in the last 30 days than other assets. So they've compared Bitcoin and the NASDAQ, and they've said based on this that Bitcoin's volatility has gone down dramatically. And if you've been paying attention to the market, and I have, we've noticed that the Bitcoin price has stayed within a certain range, and it hasn't really moved past that point. So they're saying that the last time the Bitcoin volatility declined and equaled the rising volatility of equity prices was in late 2018 and early 2019, which preceded a very bullish move in the Bitcoin price. So they're saying that, again, like they were talking about earlier, that this complete lack of volatility, because Bitcoin's pretty volatile, this lack of volatility is going to lead to an explosion either to the upside or to the downside in the near term. Now, they also point out here that several FANGs, so we talked about on my channel, we've talked previously about the tech stocks, big tech stocks being down, and Bitcoin actually not going down as much as they are. And if you take a look at what they have here, the actual losses incurred by big tech, you have Bitcoin at 74%, you have Netflix at 76%, and you have Meta at 75%. And so that kind of indicates that Bitcoin's actually holding up better than a tech stock like Meta and better than a tech stock like Netflix. So that actually should be pretty bullish. The fact that it's holding up better than those traditional investments is bullish. At least it is in my opinion. Ark says it's neutral, but I tend to think that it's much more bullish, especially to people who say that Bitcoin's too volatile and it should be traded. Well, we just take a look at this. You have Meta, which is down more, and you have Netflix, which is down more. So I don't buy that argument. All right. So now they're going to be talking about the macro stresses. Now, Bitcoin, they're also noting here that on a currency basis, Bitcoin is actually becoming less volatile compared to other currency pairs. They point out here that they have the British pound and the euro. So they're just saying that there's less volatility compared to those pairs. Now you have mortgage-backed securities, and they're saying based on this that mortgage-backed securities are stressed, and they seem to be pointing towards a recession in the housing market, and so that could, potentially speaking, add a more selling pressure to other markets, adjacent markets, and then that could also have a contamination effect towards crypto as well. And they also point out the fact that the personal savings rate has plummeted dramatically, and so people have not been able to save as much, and they're having rising debt. So that rising debt is going to make it more difficult to invest and buy things like Bitcoin. However, they also point out here that this rising personal debt could put pressure on the Fed to pivot from its hawkish stance. And that would be very bullish if that were the case, because when the Fed pivots, Bitcoin is going to be a big winner. All right, so that's the end of the report. Now, some of my own personal takeaways from this report, I'm going to go ahead and give to you real quick here. So my summary is that this has basically been a more bullish report than the last. Long-term hodlers are experiencing increased losses, which is necessary for any bear market bottom. Network activity is bullish, and Ark points out that Bitcoin has been more resilient than big tech in recent weeks. However, they still point out in several areas that Bitcoin could still fall. I see this as Ark Invest being cautiously optimistic about Bitcoin near term and optimistic about Bitcoin in the long term. I tend to agree with their outlook as I continue my DCA plan. I think the next 3 to 6 months is a pivotal time where we could see a bear market bottom or confirmation that the June low was the bear market bottom. Now, that's all I've got for you guys today. My name is Cody the Coin Raptor, and have a great day.